In the world of high-risk IPOs, every single investor is hunting for a competitive edge, an advantage. Well, today, we're going to explore a source of alpha you've almost certainly overlooked: the stars. We're talking about using financial astrology not as some kind of crystal ball, but as a legitimate predictive data set. So let's see how this actually works. First, let's just get real about the stakes. And this is a number every VC knows intimately. The venture capital world is absolutely brutal. The best estimate suggests that for every 10 companies you back, maybe one or two succeed long term. That means up to 90% might fail. That's the fundamental problem we're all trying to solve, right? So that leads to the million-dollar question for every single venture capitalist. In a market that's just defined by massive uncertainty, where all the traditional analysis can fall flat, how in the world do you consistently find the companies in that tiny 10%, the ones that are actually going to survive and thrive? Okay, so here's how we're going to break it down. We'll start with the IPO gamble itself, then introduce astrology as let's call it a contrarian data set. We'll get into the specifics of a two-step due diligence process, apply it to a classic case study of two tech giants, and then boil it all down into a checklist that could give you a whole new predictive edge. So let's talk about the IPO gamble. You see, for brand new ventures, the normal playbook just doesn't always work. You're not just analyzing an existing market, you're literally betting on a future that doesn't even exist yet. And that makes standard market analysis, well, pretty much impossible. The source material really puts the problem bluntly. I mean, with that much uncertainty baked in, a prudent investor has to start looking for better signals, for any kind of data that can help improve those terrible odds. And that brings us right here to our contrarian data set, financial astrology. Now, let's be super clear. We are not talking about daily horoscopes or mysticism. The idea here is to treat astrology as a structured, analytical framework, a system people have used for centuries to model the inherent qualities and, crucially, the timing of a new venture. Now, just look at the claim being made here. The argument is that if you move from just standard analysis to one that's astrologically informed, you could improve your selection odds by a factor of 2 to 3. I mean, in a game of inches like venture capital, doubling or tripling your chance of picking a winner, that is a massive competitive advantage. So how does this actually work in practice? Well, it's not some black box or a random guess. It's actually a systematic two-step due diligence process, and it's built around two absolutely vital questions. Let's break down that framework. The framework itself is pretty direct. Step 1, you validate the company's astrological signature. Just think of that as its innate corporate DNA, captured at the very moment it's born as a company. Then, step 2, you evaluate the transits, which is basically the challenging or supportive planetary weather the company's going to face during its most critical first year. All right, let's dig into step 1. The core idea here is really authenticity. Does the company's inherent astrological makeup actually align with what it's trying to do in the real world? The claim is, if you go back and study the charts of failed businesses, you'll often find this fundamental mismatch between their signature and their actual business model. It just wasn't in their DNA. Now, before we get to step 2, I want you to just let this number sink in. It's estimated that somewhere between 50 and 80% of all new businesses fail within their first year. That first year is the danger zone, and it's precisely what the second astrological question is designed to diagnose. So here's the crucial point. A young company, it's like a sapling. It just doesn't have the deep roots or the strong trunk to withstand a major storm. Analyzing the first year's astrological transits is all about identifying those potential storms ahead of time. These are the kinds of difficult aspects that a more mature company could probably handle, but that might be totally fatal to a startup. And that could explain a huge chunk of that 50 to 80% failure rate. Okay, so theory is one thing, but let's make this really concrete. We're going to look at two of the most iconic tech IPOs of all time, Microsoft and Netscape, to see how their astrological signatures told two completely different stories right from day one. From the very beginning, these two companies had totally different identities in the market. Microsoft was always destined to be a long-term powerhouse, a true value creator. Netscape, on the other hand, was the classic story stock, super exciting, explosive, but ultimately defined by extreme volatility. And what's wild is their charts reflected this perfectly. So in Microsoft's IPO chart, the absolute key marker was something called a Jupiter-Pluto conjunction. What does that mean for us? Well, Jupiter is the planet of expansion and wealth, and Pluto is the planet of power and transformation.
This signature translates directly into what we all saw: the potential for immense, almost unlimited wealth, market power, and incredible long-term success. It's literally the signature of an empire builder. Netscape's chart, a completely different story. Its key signature was Mars rising. Mars is the planet of action, energy, aggression. This is the absolute classic signature of a hot stock. It's a momentum play with unbelievable initial energy, but it's also a clear, flashing sign of the high-risk, high-burn volatility that, well, we all know how that story ended. And this just illustrates the pattern so well. Microsoft's combination of wealth and power, Jupiter and Pluto, led to total market dominance. Netscape's aggressive Mars signature led to a fiery but very volatile run. And you can even throw Pixar's IPO in there. Its chart had a Moon-Saturn conjunction. Moon represents the public, Saturn represents disappointment or limitation. And that's exactly what happened. Public disappointment in the stock's performance not long after its initial hype. Okay, so this is all great, but how can you, as a venture capitalist, actually use this? Let's distill this entire framework into a simple, actionable toolkit that you can integrate directly into the due diligence you're already doing. Here it is, a simple 3-point checklist. First, signature and business alignment. Does the company's DNA match its mission? Second, first-year risk assessment. Are there any major red flags, any survival threats in those first couple of years? And third, wealth and volatility markers. Does the chart point to long-term wealth, like a Jupiter-Pluto, or is it pointing to short-term explosive volatility like Mars? This helps you understand not just if a company might succeed, but how it's likely to behave. And looking ahead, the source even proposes standardizing all this analysis into something like a value line rating, an astrological certification from 1 to 5. You know, a simple score based on signature alignment, first-year risk, and its long-term potential. This all brings us to the final and maybe most important takeaway. In the high-stakes, high-uncertainty game of IPOs, the goal is always to find a better predictive model. The ultimate argument here is that this isn't just another interesting data point to throw on the pile. In a world where traditional valuation often fails because there's just no history to model, this astrological framework might offer a fundamentally different and potentially superior predictive advantage. It's modeling the entity itself, its very nature, not just the market's perception of it. So as you sit there and vet your next investment, the final question is this one. In your relentless search for alpha, for that tiny fraction of ventures that create massive, world-changing value, what potential competitive edge are you currently leaving on the table?